Hello everyone, today is Wednesday. The market's just about to close. It's almost 4 o'clock. Before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. There are risks involved with trading. So what I'm showing you here is right as the market is about to close, we have two great examples of the market hitting this roadmap zone and then reversing and bouncing off of it. Now this is important because we use the roadmap software as a filter, so you wouldn't go long there at about 3:30 and you wouldn't go short currently where we're at right now until the market breaks through it. So these examples are good to show you how support and resistance are important. As a trader, you should know where manipulation occurs. And now, as we wait a moment before jumping in long, we're going to see the market possibly either go through the zone or reverse off of the zone. So I'm almost anticipating the way the market's acting, that it hits the zone, it's not going through it, it's starting to reverse, it's happening. And there you have it, guys. There you can see how the roadmap software, as long as it doesn't break through the zone, it basically tells you that there's manipulation. It can go through the zone later, but it's really just telling you that the market is holding and that we should see a bounce of support. So if you're going to go short, great opportunity to filter the trade. All right, so this is the roadmap here. We're at the end of the day. If you're still trading, this is an opportunity here for a filter to the short side or to go long. Now, what I'm going to do here, I'm going to remove this here. I'm going to show you something else. I'm going to show you a lot of interest in the original method, the at the open method, which I'm going to show you right now. And the at the open method, let me just add it here. And the DayTradeToWin at the open 2 method, the second version of it. And we don't really have to do anything with settings. We leave it as is, and I'm going to just turn it on here. So the way that the at the open method works, it's considered one of the original price action methods that really exist out there to tell me to buy or to sell as the market initially opens for the day. So I like to look at the at the open method only within the first few hours of the session because that's the initial push or the move of the day. And so we have here a short for today on the at the open method. And let's take a look at yesterday as well. So we'll go to yesterday. Here is yesterday. We have a short here and we have a long here. And we also have a position the day before here to go long on the at the open method here at about, looks like about 10:15 to go long. So when you think about price action, we have to consider a few things. One is we don't try to use any of these conventional indicators. So you'll never see moving averages or EMAs or volume or anything, MACDs and all those things here that you see here, momentum, parabolics. We don't use any of that stuff. Price action should really be focused on the candles, how they're moving, and price. And that's very important when it comes to understanding price action, and also should be universal. So as an example, I have the E-mini S&P, but let's say that you trade the crude oil, right? A lot of traders look at oil, and so when you look at a price action method, it should really focus on universally multiple markets. Let me just actually add here the crude oil. Okay, so when we look at the at the open method for today, we're going to start off with, just remove some of these things here. We're going to start off with a long signal right over here at about 9 o'clock to go long on the at the open method. And let's take a look at yesterday, see what that looks like. For the crude oil, a short, again, roughly about 9 o'clock to go short. And let me take a look at a third day, so 3 days in a row. This would be long at 87, what is it here, 87.21. So you can see that and this happened a little bit later on, about 10:05. So you can see here that the idea when looking at the at the open method, looking at price action, it should be based on a universal idea across all markets without using any of these conventional indicators, which really is a problem if you think about all the different values, moving average parameters that you have to look at, MACDs. We don't have to do any of that when we look at the at the open method or with price action. My name is John Paul. I will see everyone at the next video. This is a recap of the roadmap and the at the open 2 on a few different markets. Until next time, good trading. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.